Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in. Let's take a look, see what's going on. If you want to follow me, it's @finance. If you want to join our community, finding-value.com. We've got a question and answer session going on today, Saturday, from 7 a.m. Mountain Time to about 10 a.m. Mountain Time. This is where I answer your questions. You can interact with me face to face through Zoom, and I answer your guys' questions. So, coming down to Michael Girdley, the 2025 economy in a nutshell. Look at the lines there for skiing. Yeah, people are looking real. They're really struggling here with that many tickets. It is expensive to go skiing at these areas. Especially Colorado. And I just went to go-karting. There was a lot of people go-karting, and that's not cheap either. So I see people spending tons of money. That's what I visually see everywhere. So against all odds research is the next big move for oil on its way. So what do we have here? This is the oil price up top in the. Then we've got this quote band squeeze. I'm not exactly sure what band squeeze is, but it looks very to where we were located in September, October of 2020. And I've made some comments to people stating that this is very similar, looking at some of the ratios to September, October of 2020. I made those comments of if you were to chart the equities divided by crude oil, you're seeing these gigantic squeezes into the corner here. And if we get a monster breakout, what that means is that the equities are going to outrun crude oil. And if crude oil starts to run higher, you're going to get a multiplier on top of it for those equities. So we had that same squeeze occur at this time here. So when this goes up, the equities that I am in go up 2 or 3x or more this move. So this move was a 237% move into May of 2022. Some of the companies that I was in went up well over 10x, which means that the leverage to the price of oil was over 5-6 times. Now we've gone sideways for a while here. But if you look, you could throw a trend line through here too. We've broken that trend line. The band squeeze is going to turn up, and we're going to move our way on up potentially. Nothing's 100% in the bag, but this is looking good, and hopefully we can continue this momentum to the upside. The equities look ridiculous when priced in crude oil. They look ridiculous. They look so ready. They look very, very prime, is what I'll say. Wow, after 4 years, Canadian venture CDNX stocks are starting to break out versus the price of gold. Crude oil is also starting to break out against the price of gold. A great sign for cheap microcaps across sectors in gold, silver, copper, lithium, crypto, and many other areas. So what we've got here is we've got this divergence in the MACD that's going to blow out. We've got a downtrend line break that's occurring right this second. And this is for the CDNX, which is the S&P TSX Venture CDNX Composite Index, divided by GLD, which is the Spider Gold Shares. We're starting to get this break. What I see, the oil equities look ridiculous. And it ties in with the CDNX as well here. This is the confluence I look for. Another confluence that you want to look for is in 2020. See this ultimate bottom here in 2020? A lot of the time, you get a very big run-up, big white candlesticks, and then you get small red candlesticks come all the way back down to the bottom of where it bottomed. This is a big double bottom. This could be an explosive rally in the CDNX. Now, I understand people are going to say, Andy, how do I play this? If you're part of the website, you already know how to play it with the oil equities, and you know which ones. I'll go over on Saturday some of the companies that will benefit from this. A lot of the companies that we're already in, that we've already positioned in, they're already looking fantastic. You already know about. Christine Garreau says Toby Rice of EQT, which is a oil natural gas company. Shale has matured. That's all you need to know. Shale has matured. What is the impacts of shale maturing? Boom. Boom. Boom, boom, boom. Now here's the thing, not grow. I don't know what to make of it. If shale oil cannot grow and 95% of the growth came from shale oil, what does that mean for the future of energy? What does that mean for future of the economy? I'm not exactly sure. I mean, this could get real ugly. And we hit it 1970 conventional American. We had conventional oil peak in 2000s, and if we hit a peak in everything now, this is going to get. I mean, I don't know how to like. We haven't gone through something like that. We could see oil at 1,000, 2,000, 3,000. Like it could just run. It will put everything into a recession. The problem is if we actually peak and depending on the decline rate, the decline rate on the back end is the big question mark. Do we peak out and go sideways? I would guess that would be the case in the beginning. So maybe we run to like 150, 200 a barrel, throw us into recession. After the recession is done, we try to go up again with oil price. And then that will be where the test will be. The test will be after that recession, they'll print money. Oil will run to some ridiculous number. And then I don't know what happens after that. Because if you get strong declines, you could see oil price just continually go up and make higher highs and higher lows and continually throw economies into recessions. This is Suncor Energy. So what are they doing with their money? Suncor is an oil company. Cancellation of 7,645,000 shares for approximately 390 million. All of these companies are buying back shares, guys. I mean, they are buying them back like mad. All of them. What a great opportunity to own energy where the companies are returning capital to shareholders. We've got bottoming in the CDNX. We've got crude at the bottom of the band here ready to rip. What? Ranking, we need to build dozens of nuclear power plants in the US, and uranium is the trade, maybe even the greatest trade ever in the history of the world. President Donald Trump. Now, what I read from this, and I'll just twist it a little bit. Tell me you're an oil bull without directly telling me you're an oil bull. What he is saying is that oil is probably peaking and that we need to ramp up nuclear power plants like mad. Yeah, that's exactly what we need to do. So that's probably what we're going to do. The question then is who makes all the money? In a very expensive world of oil, obviously we're still going to have to make money mining uranium for sure. And we'll probably develop something to get uranium out of seawater as well. But yeah, this is it. This we're going to be coming up into a world that I think we're going to have to transition massively towards nuclear. Christine Guerrero says oil prices less than $75 a barrel aren't healthy for future supply. Markets need to recognize that oil supply isn't immune to inflation. This is the total world oil rigs ex North America as it goes up and down based off oil price. Michael J. Kramer, he says global central bank liquidity seems to be rather significant divergence. So what is this? So this is the S&P 500 in the blue, and this is your global liquidity in the white. Global liquidity peaked 2021. We've come on down, and the S&P 500 continues to go higher. Now, I haven't watched this, historically, but it looks to me like global liquidity may be somewhat correlated to the S&P 500. You can see a big global liquidity move here, and then the S&P followed behind it, and they both kind of rolled over. But I don't know how much these correlate. I don't know enough about global liquidity exactly correlating to the S&P 500, but this is only one cycle too. I'd like to see multiple cycles of this run all the way back to 1960s or 50s or something like that. Investment Wisdom, Charlie Munger says, you only get a few opportunities and you have to grab them aggressively. When they come, because even in the most favored life, they're really rare. So if you get a good few opportunities, grab them aggressively. Jacob King says, wow, BlackRock's Bitcoin to its largest outflow ever of net 333 million. BlackRock is jumping ship because they know this entire Ponzi about to implode, bloodbath incoming. I don't know if that's necessarily the case. I think BlackRock probably does whatever the customer's funds flow is doing. If funds are flowing out of the ETF, I would imagine that they would have to sell some, right? I don't know if it instantly means that this is like the whole game's done. Tough to say there. Alex Hormozy says, rich people buy stuff, rich people buy time, poor people buy stuff, ambitious people buy skills, and lazy people buy distractions. Platinum. So zooming in, we see the E wave has formed a bull wedge. So this is an A, B, C, D, E, kind of the three hump consolidation with a wedge squeezing up. And it broke out today, definitely broken out to the upside for platinum, the coiling. So platinum hopefully is going to get some momentum here. Fingers crossed. Trader WTI. So another strong session for the bulls, marking 4 consecutive bullish continuation candles as the price breaks above another resistance line. Critical horizontal resistance level just above. Where was I reading? Just above the 72 area. Key to breaking out of the low base that has defined price action in recent weeks. And we don't need to read through all that. But here's the horizontal. You've got support, resistance. Whenever you hit this area, it's a strong support resistance band. And yeah, we are starting to break above that. This is 72.50. $3,000 gold is basically a done deal. These are price targets for 2025 and 2026 from a variety of people. So let's go over some of the price targets that people have that people follow on YouTube. Jim Rickards, 2026 has a $10,000 gold price. Holy crap! Now that's moving. Let me move this over just a little bit so you guys can see. There you go. $10,000 gold price. Michael Oliver's calling for $8,000 gold in 25 or 26. Mike McGlone, I know he's like a perma oil bear. I think that's him. He says $7,000 gold. Robert Kiyosaki's at 5,000. David Hunter at 3,200, 3,500, 2025, something like that. David Rosenberg is at 3,000. Gareth Soloway is at 3,000. Nomi Prinz at 3,000, then 4,000 in 2026. Bank of America and Citigroup $3,000. Same with Goldman Sachs, $3,000. A lot of people at around $3,000 is what I'm seeing um, for the price targets for this year, actually, 2025. Another bullish sign in energy, like the last one found by Namzis, small speculators are short natural gas for the first time since November of 2020, since November of 2001, just as natural gas is breaking out. November 2001, natural gas bottomed and rallied 200% over the next 1.5 years. Oil gained about a double. So this is small speculator net position, super short, and again we are super short here. Is it going to repeat? I don't know. Definitely possible. We'll see. Here's a quote from Milton Friedman. He says, most economic fallacies derive from the tendency to assume that there is a fixed pie, that one party can gain only at the expense of another, says Milton Friedman. You know what else has a fixed pie? Bitcoin. Bitcoin has a fixed pie. And what he just said there is that the fallacies derive from the tendency to assume that there's a fixed pie. But if it is a fixed pie, it means that one party can gain only at the expense of another. Bitcoin, at the people who adopt it earlier, are gaining at the expense of others. Huh, interesting. Here's some more quotes. Fundamental value investing will always be relevant. To succeed, always buy for less than what it is worth and be smarter than the market. It will never go out of style. This is Charlie Munger. Julian Robertson says value investing remains the best course. For all you value investors out there. Here's Tavi. He says, at least in the tech bubble, companies trading at absurd valuations held a slim hope of eventually becoming profitable. Fartcoin has zero intrinsic utility and is now being valued at 1.3 billion. This is the very definition of insanity in markets, in my view. Yeah, I don't get it either. Like, who is buying this crap? I really want to know what is the average IQ of the person buying Fartcoin, thinking that it's going to go up? Like, why are they buying this? I don't understand it, guys. I don't. On time, ready for a pushback. The US dollar index, there we are, overlaid with the previous Trump going into office here. And when he went in office, boom, dollar too strong, pushed it on down. Are we going to see this again? If it's the case, we're going to see a lot of commodities. The Canadian index that we were looking at earlier, they're all going to go up if the dollar were to fall. And they're going to go up big. It'll be a big tailwind. Peter Lynch says, when stocks are attractive, you buy them. Sure, they can go lower. I've bought stocks at $12 that went to $2, but then they went to 30. So that's Peter Lynch's approach. Do I wait to buy or do I take the value approach? If the value is good, buy it and continue to cost average into it. That's basically what Peter Lynch is saying. That you can't necessarily time it perfectly. Norm Roy says, the most important chart in gold is updated. Gold versus the 60-40 portfolio total return. Will 2025 be the year where we basically break out of this kind of downtrending session of this ratio? He thinks that this is probably the most important ratio out there. And if we can get moving on gold, outperforming the 60-40 portfolio, it's game over. Like gold's just going to rip. I tend to agree, but gold's already moving. So I think that's already in progress. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. We'll see you in the question and answer session if you guys are attending that at 7 a.m. Mountain Time. And that's all I've got, guys. So we'll catch you later. This is Finding Value.